My dear friends, welcome to my channel Forever. For any questions, you can reach me at I will do it forever. Okay, so it's a video about my opinion on the return for investors versus the traders. Who stands good or better or best? So, for example, I have taken State Bank of India. Okay, why? Because that's a stable stock and you can see a sidewave trend or a slightly increasing trend. So you can see this trend shows the increasing or a side wave. Okay, such stocks are good for uh, traders or even sometime in terms of investors. So let's look into it. So we'll calculate the numbers who gets more. So let's suppose we have two guys. One is an investor and one is a trader. So one guy thinks to invest in State Bank of India for one year time horizon. Okay, so I have considered 1 year horizon, like 1st Jan 2019 till 1st Jan 20. Okay, in this time horizon, let's see how much return investor gains or and how much returns the trader gains. So can you see this line, right? So this is the start and this is the end. So a guy invests somewhere here and exits somewhere here. So for that, he'll get this much return. I'm just highlighting here. He gets 16.89, which is good, definitely. So if you compare with RD and FD, 16.8 or close to 16 to 17% return in a year considerably is good. Okay, investor gets this much uh, if he exits here. Okay, let's consider he'll exit here and book the profit. Okay, so let's come to traders point of view. Okay, so when it comes to traders, he'll not just go ahead and buy any stock, he'll look for an opportunity. So today in our example, for technical analysis, we will consider only the RSI, the relative strength index. You can study about RSI in Google or Google it, but today I'll just quickly tell. So if it comes below 30, this is RSI I'm showing here. So you can see here, I'm just highlighting. So it's a normal setup in any charting mm, platform. Okay, you can. I'm using the Zerodha, and in that I'm using the trading view. So any stocks come below 30 is considered as oversold. Any stock comes above 70 is considered as overbought, meaning when a stock when a RSI comes below 30, in future there is a good chance for a stock to go up. So same thing, when it reaches above 70, in future there is a chance to come down. So this simple strategy we will use for, I'm sorry for bad drawing. So okay, so let's use this RSI and see how much a trader gets the return. Let me take out everything, all the charts. So for us, the pointers are whenever RSI goes up, crosses the 30 from the below, that's the entry point. Similarly, whenever it crosses 70 from the above, that is the exit point. Simple. So this is the first chance we got. This is the first chance we got. Sorry. So this is the first chance we got. And second chance we got here and exit here. So this is the second chance. Let me highlight that with entry and exit. So this is the entry point and this is exit point. So with this, right, so just see here in the first chance, this guy got 13.56% return. Similarly, here, the second time he got 10.41% return. So, and later on, he did not get the entry. So, after this exit, he had to wait for long time, around like 157 days for a good entry. That's how a trader is. A trader definitely waits for a good entry. And okay, let's look into some calculations in Excel. Okay, this is about investor and this is about trader. So in terms of return, he got a 16.89. I have just captured same numbers here. And first time he got 13.56 and second time he got 10.41 and totally he got 23.97%. So comparatively, he got 7% more compared to investors. And if you if this trade was done with a 1 lakh, it's in terms of INR like 16,890 and 23,970 for respectively for investor and traders. That's the INR return. So 7,000 more for traders. So now, right? Okay, this is it. Okay, like in terms of return, trader stands better compared to investor. But also there are few advantages for a traders. Okay, I'll tell you how. So if you look, right, this is a daily chart I'm showing you. So he got entry here and he got exit here, and then he had to wait for 157 days. Again, he got an entry and exit, and he had to wait for so many days. So these days, right? So what I'm highlighting here, these days he's not doing anything in State Bank of India. But for other stocks, in other stocks, definitely he will get one or other opportunity to enter and exit. Just imagine, so even in this big gap, if he even increases some percentage here, just imagine the amount of return he gets as a trader. So this is my personal opinion. Traders are better in terms of taking the return, in terms of earning the money than the investors. Uh, so I hope you got the all the points here, and I just reiterate quickly. Traders, right? I do the same way, and I'll wait for a good opportunity. We need to wait for a good opportunity. Look for a stock which is fundamentally good, and look for a stock which is either sideways or slightly increasing order. Like the stock should keep on growing. So that's the stock we need to pick. And along with RSI, if you know MACD or any other good indicators you like for a trading purpose, it's always good to combine the RSI with any good indicator that will yield us a good return. So if you like this video, like it, share and subscribe to my channel. I hope you like this small piece of the comparison between investors and traders. Thank you.